Hi everybody, Nick McDonald here. Thanks for joining us for this week's ICE Commentary Equity Market Update. First things first, we had some big news out on Friday after the markets closed for the weekend. So you would have all heard this news by now. It's been all over the news over the weekend, but the US was downgraded by the S&P and their credit rating was cut. So basically, because this happened when the markets were closed, we've been waiting and watching and waiting to see what the market does when it opened up today. Now, for that reason, I'm recording this video a little bit later than I normally would. I'd normally have done it a few hours ago. It would already normally be out there because I wouldn't really be needing to see today's trading action. I'd know pretty much where it was going to be. Today was a different story with big surprise news while the market was closed. I wanted to wait and see. So apologies, by the way, if this video is a few minutes later than normal if you watch it on a Sunday night. With the currency market, it was okay because we had the spot market for me to look at that had been open for a little while. For the equity markets, we had nothing for me to refer it to, so I had to wait until 6 p.m. Eastern Time where the markets opened up just to really see what was going on and kind of digest the impact of this news. So I learned a couple of things as well in doing this. So one thing, because the ICE markets as well as other US futures markets open up at 6 p.m. on a Sunday, and what you see here is the Russell chart on a 15-minute chart, showing us the 6 p.m. open where the market actually gaps down around about 4%, actually gapped down about 3.5%, then fell to about 4.5%, and now you can see it recovering a little bit. But what happened here was we gapped down, and what I noticed was when I was looking at this, I realized my daily chart wasn't moving. So just a little update here just to explain the difference between the two. I've realized that my daily charts on my charting package are set to show the action from 8 p.m. Eastern Time, whereas the official market is 6 p.m. So what I've had to do is just set up a template so I can see the proper 6 p.m. open, and just excuse me and apologies that it's not showing up exactly accurately on the daily chart there. But what we've got here on the 15-minute chart, we can see all the action we need to, and we're trading around about 697. So basically we're trading down around about the lows of Friday down here. So I've just got a blue line in there. This is around about where we're trading. We've been lower and we're rejecting again. So that's where we're at. We're down around about 3.7% as we speak. We have been lower, and as you can see there, this move here is actually reasonably volatile, opening up at 700, coming down towards 690, and now coming back up towards 700 again. So let's just look at the higher time frames here and just assess the impact of where we are. Ultimately, we're down around the 700 region on a monthly chart, and this is where for many months I've been saying we're likely to pull back to the region of 735 to 700 when and if we get the big pullback. And we've had the big pullback now, and we're just in that zone. So this monthly chart is very much intact. This monthly uptrend is very much intact. We're in the Fibonacci sweet spot, just above the 61.8%. We're at the big number of 700. And we're in that moving average zone, around the 10 and 20. So all in all, it's quite a nice uptrend, and we're still intact and still looking like going higher. It's really when we come and look at this on the daily as well and think, well, we had such a big down week last week, huge sell-off, really long way from the averages, and we're at that big number of 700, bearing in mind we're trading just below that at the moment, around 697, and starting to look like it's due a snap back up. When we come and put this all into some perspective now, and we bring up this 15-minute chart here again too, what we can see is this gap downwards, and gaps often on index markets do like to close. And we're at support at 700. We're looking like we could just be about to break up above that. It's a really tough week. It's probably one of the toughest weeks I've had in terms of trying to get a market direction for the week, because we've had such big news, and I'm talking literally when the market's just opened up and we haven't really had time to digest that. It's still Sunday night in America. It's the middle of the night in Europe. It's early morning in the Asia Pacific area, and most of the world have not really had time to digest this news and the impact of it and to actually start placing trades. So it's very early to make a big call for the week. It's very early to make a big call on what is likely to happen when the US cash markets open up, and as to whether the American public start to panic and sell stocks or not. So it's too early. I don't want to speculate so much on that, other than to say I'm not predicting global financial crisis number 2. I don't think that will happen. I think the fact that everybody's talking about that is a good enough reason for it not to happen. If it did, it would probably be one of the first times in history where the press and the public have been able to predict a major market collapse. So for that being one of my key reasons, I'm not thinking we're going to have a huge fall here. I'm not thinking we'll collapse this week, but anything can happen. I certainly wouldn't be putting my money on that one piece of information quite yet. I'll be waiting and seeing what happens, and I'll be very happy to trade short just as quickly as I trade long. But early in the week, my preferred choice is for this market to come back up, probably to close this gap. I'm expecting that to happen, probably a little bit of a rally, and then we really just need to see. Like I say, I'll be just as quick to trade short if I'm wrong on that and the market starts to fall. Just one quick thing on how I'll be trading intraday. I've showed you these gap closes on the Russell before in the past, and it's a really, really effective strategy, especially in volatile markets. And if we look at last week, gap up, closed the gap. Coming back to the day before, we had a gap down, that day didn't close. So we've got 1 from 2. Day before, there was no gap, but still just looking at last week's action, another day here, gap down, closed the gap. Now we've got 2 out of 3 of the gaps. And on Monday as well, last week, big gap up and close the gap. That makes it 3 from 4. Really, really effective strategy, and it continues to make money for me week in, week out. Has done for a very long time, just trading these gap closes on the Russell. And it's the kind of thing I'll be looking at this week, where I don't have to pick major market direction on a daily, weekly, or monthly chart. That kind of time frame for me is too risky this week. I'll be focusing on intraday trading. I'll be focusing on trading around these major levels, like where we are right now. So for example, any break up through 700 here, 700 is a major level. Any break up through that, and we're very close to it now, we'll be looking quite bullish. These are the kind of levels I'm watching for support, for resistance, for rejection of those levels, for turnarounds in the trend, much like what is happening here right now. We've already put in a higher low for the morning. If we can break up through these highs here and push up to new highs above 700, we might be looking like closing that gap on the Russell, and certainly I'll be looking at that gap close on the a US cash market session and seeing, do I get some gap closes this week as well. All in all though, just coming back and summing things up on the daily, weekly, monthly charts, we really need to see panic could set in. If it does, then yes, we're obviously going lower. I would, slant my view this week slightly towards the opposite side of we're more likely to go slightly sideways, maybe consolidate around 700 to slightly up and maybe get a bit of a rally before deciding if that rally pushes on or if we continue to the downside. But certainly a week to be very, very aware of the risk involved and to be very focused on protecting what you've got as compared to trying to make a huge amount of money just to trade with the direction of the market. That is what I'll be doing, be it up, be it down, looking to decide based on candles, based on trends, which direction is this going, and let's trade that direction, be it up or down. Hope that helps everybody. Happy trading. Certainly we'll have an exciting week ahead and look forward to updating on that next week.